Hi everyone, I'm James. Alphabet has just reported its latest quarterly results. But beyond the numbers, this quarter raises a much bigger question. Is AI fundamentally changing Google's business model? The results were impressive, with strong growth across both Google's core businesses and its AI-related investments. Revenue grew 24%, operating income increased 30%, and Google Cloud delivered another exceptional quarter. But I think this earnings report tells us something much bigger than last quarter's results. For almost 2 decades, Google built one of the world's most profitable businesses by monetizing search and online advertising with relatively little capital investment. Today, the company expects to spend around $200 billion this year building AI infrastructure. So perhaps the real question isn't whether Alphabet had a strong quarter. It's whether AI is changing the economics of Google's business. To answer that, let's start with the area many people thought AI would disrupt first: Google Search. One of the biggest concerns surrounding AI has been its impact on Google Search. If users start asking ChatGPT instead of Google, where does Google's advertising revenue come from? So far, it isn't what we are seeing. Search revenue still increased 17% year over year. Management said users are increasingly asking longer and more complex questions through AI overviews and AI mode, creating opportunities for more relevant search results and advertising. The same approach is now extending to YouTube. Google is integrating Gemini directly into the platform through features like Ask YouTube, allowing users to ask detailed questions about individual videos. More than 140 million users engaging with this feature in June. Internally, Gemini is also improving efficiency across the company, including customer support operations. So far, AI doesn't appear to be disrupting Google's advertising business. Instead, it appears to be strengthening the broader Google ecosystem. The second part of the AI story is Google Cloud. While AI is strengthening Google's existing businesses, it is also creating a powerful new growth engine. Cloud revenue increased 82% year over year, with growth accelerating from the previous quarter. At the same time, operating margins continue to expand, reaching 35.6%. This is important because Google Cloud is showing that rapid growth and improving profitability can happen at the same time. The demand behind this growth also appears strong. Google Cloud's backlog increased by more than 50 billion sequentially, reaching 514 billion, with management expecting to recognize more than half of that revenue over the next 24 months. The company is also seeing increasing adoption of its AI products, with nearly 90% of Fortune 100 companies using Gemini Enterprise. Google has also started recognizing revenue from TPU system sales, providing customers with Google's own AI infrastructure alongside its cloud services. Together, this trend suggests Google Cloud is becoming much more than a traditional cloud provider. It is becoming a platform for enterprise AI. And if cloud continues growing at a much faster rate than Google's advertising business, the question becomes, what does Alphabet look like 5 years from now? The opportunity from AI also comes with a major challenge. AI may create a significant growth opportunity for Google, but capturing the opportunity requires something the company has historically avoided at this scale: massive infrastructure investment. For years, Google's business model was extraordinary. Build software once, serve billions of users, generate enormous cash flow with relatively little capital investment. AI changes that equation. The next generation of AI models requires exponentially more computing power, which means that more GPUs, more TPUs, more data centers, and more electricity. And Google is investing accordingly. Capital expenditure reached $44.9 billion this quarter, roughly double the level from a year ago. The company now expects to spend around 195 to 205 billion on capital expenditure this year. As a result, free cash flow turned negative this quarter. But the most interesting signal is this. Even after this record level of spending, Google still doesn't have enough capacity. Management said the company remains supply constrained and is temporarily using third-party capacity to support customer demand while it expands its own infrastructure. This suggests this investment cycle is not simply based on optimism. It is a response to strong demand from customers today. This leads to a biggest question surrounding Alphabet's AI strategy. What kind of business will Google become? There are two sides to this transformation. On one hand, AI could strengthen almost every part of Google's ecosystem. Search becomes more intelligent, YouTube becomes more interactive, Cloud becomes a larger enterprise AI platform, and Gemini, combined with Google's infrastructure and distribution, could become a meaningful competitive advantage. The company's growing backlog and strong customer demand suggest there is significant demand for these AI services. But this opportunity also requires Google to become a much more capital-intensive business. Higher capital expenditure today means higher depreciation and greater pressure to generate returns in the future. And if AI infrastructure becomes increasingly commoditized, the key question is whether owning the best AI models and infrastructure will remain a meaningful advantage, or whether customers will eventually choose providers based mainly on price and efficiency. Ultimately, the question is not whether Google is investing heavily in AI. It clearly is. The question is whether those investments will create a sustainable competitive advantage and generate attractive returns over the long term. This quarter didn't answer whether Alphabet's AI strategy will create long-term value, but it did reveal something important. For years, Google's extraordinary profitability came from a capital-light advertising business. Today, that business is increasingly being supported by massive investment in AI infrastructure. If this investment continues strengthening search, accelerating cloud growth, and deepening customer relationships, they could reinforce Google's competitive position for years to come. But Alphabet is also entering a fundamentally different economic model, one that requires enormous upfront investment and the ability to generate strong returns on that capital. Ultimately, this quarter was not just about another strong set of earnings. It was about watching one of the world's most profitable advertising businesses transform into one of the world's largest AI infrastructure companies. I hope that's useful for you. Stay focused, everyone. I'll see you next time.